The bulls are on parade, especially with regards to precious metal price predictions, and this is no different, but this one may have some merit, especially with what's going on these days. This is not an unrealistic call that I'm going to be talking about in this video as we explore. Are you ready for a 2-year bull run on gold? Well, that is what Bank of America is saying is going to happen, and that gold could reach $2,500. Now, as I record this video, the prices for gold have been going up fairly steadily. It's within spitting distance of its all-time high. So therefore, it's only natural to see more and more of these bullish calls for the precious metal. But regardless, we are seeing in the markets today something that in some ways is unprecedented, considering all of the economic indicators and considering where we are at with inflation and a potential for another banking crisis on hand. We've already seen, really in a sense, with Silicon Valley Bank, Signature Bank, and with Credit Suisse, the beginnings of a banking crisis that has been the worst that we've seen since the great financial crisis of 2008. And that has prompted investors to flee into gold. And this is something that's occurring regardless of what the Federal Reserve says or does. In fact, that's kind of where we are at now, because we're seeing inflation as well head into a direction that wasn't here during the financial crisis of 2007 and 2008. We did not see inflation other than the normal 2% that is their target, and somewhere thereabouts, it's on average. But nowadays, with the dollars being devalued at a rate of 5%, and there is going to be other indicators that are going to move that needle, and potentially the Federal Reserve's actions, no matter what, I think are going to have a negligible impact on gold, unlike in previous times when these numbers came out. Typically, we saw gold and silver they would fall under pressure with the strength of the dollar increasing, but not now. That's why people are looking to alternative assets, anywhere from cryptocurrencies, bitcoins, to mining stocks. We'll talk about that in a moment, but also hard assets like gold and silver. And yes, some other metals as well too. You know, people are also looking to diversify into other inflation-proof investments, but also into lessening the impact of inflation by buying non-perishable goods and stocking up on items to prepare not only for whatever could come down the pike in terms of geopolitical uncertainty, in terms of economic uncertainty, in terms of a potential with some fear to be an economic calamity that could come with a dollar or a currency crisis. We know what's coming down the pike in terms of with Fed now and with central bank digital currencies, but we're looking at ways to be able to prepare there, as well as to be able to stave off inflation by buying more of certain products that are non-perishable now, because you know that they're going to go up in the future. So you might as well stockpile now to save yourself a little bit. And that's kind of the idea of what investing is, what people do in the markets, but it's a much more practical way to do it here with regards to be able to protect yourself from inflation other than just buying gold. But gold certainly has been one aspect that has done very well recently. Now, by the time you watch this video, who knows where gold could be? We could see a pullback. We could see the markets move in the opposite direction. But I believe overall, more likely that's going to be temporary, that I think we're in for, in a sense, a bull run. I don't know if it's going to last 2 years. I don't know what that's going to look like. But whenever there is a bull run, you're going to have periods of pullbacks as well. So we really just don't know. But Bank of America is saying here, according to investors fleeing into gold, ending 10 consecutive months of outflows. This is from a report from the World Gold Council. In the ETF report, the World Gold Council said 32 tons of precious metal worth $1.9 billion flowed back into global gold-backed exchange-traded products in March. In addition, Bank of America says gold's rally to its all-time high of $2,078 an ounce could signal the start of this 2-year bull run. So we've got to hit that first. We are literally within spitting distance of that occurring, and then we might see that run back up into that $2,500 an ounce level. And I tell you what, this 100-gram gold bar that I bought was when gold was much less. But considering the tax hit I took on cashing out my IRA to get this bar, along with inflation that we're seeing now, I'm still not ahead on this. I'm getting very close to breaking even, but not there yet on that gold bar. And that's just it, folks. You have to take into account whenever you put money into things that are continued stores of wealth or stores of value or hedges, you may not necessarily see a quick turnaround or profit taking. But there is options for that kind of thing and risk management in your portfolio. I think having gold in the physical form is one way to lower your risk during these times, is a way to hedge. But even within the precious metal space or within the metal space and mining sector, there are ways to be able to make money and invest. That's what brings us to the sponsored portion of this video when we're talking about energy. Energy is so important. And oil and uranium as well can play a role in terms of the overall economic health or uncertainty of a nation or the world itself. We know that energy prices have skyrocketed in the past few years, but we can't abandon oil and gas anytime in the foreseeable future, in spite of what the political pressures may come from ESG initiatives in the corporate and political world. But we are seeing a dramatic comeback in spite of all that in nuclear energy solutions, all centered around the uranium industry. There's a massive amount of demand for nuclear fuel. In the U.S., the 20% of those who get their electricity from nuclear energy are getting almost all of it from essentially two places, Russia and Kazakhstan. The industry saw massive underinvestment in new reactors and in new mines, and with the Eurozone and the United States both waking up at the same time to learn that China and Russia have essentially cornered the market, and the knowledge and technology of how to mine, extract, treat, and store the metal, and with its price already more than doubling from its unsustainable bottom, we now find ourselves in a situation where there's a clear runway of at least a full decade where deficits will be huge, and North America is in a literal nuclear race to bring production to the United States, where current production is virtually non-existent. Best of all, though, both Republicans and Democrats are in full agreement that this is a national priority. It's not very common you see bipartisan support for something. In January of 2020, the first company of its kind in the uranium industry went public. The first ever and only uranium royalty company. The most profitable and effective business model in the commodity sector, and that company is Uranium Royalty Corporation, and the NASDAQ ticker symbol is UROY. It already owns 15 royalties, about 15 of them with 2 resuming production, so they'll be generating income for UROY very soon, and the partners it has on its properties are the best companies in this sector. UROY is now in the front row and the driver's seat to be the go-to funding partner for new mines and new royalties. What's exciting is that Cameco has disclosed that McArthur River is the world's largest high-grade uranium mine, with ore grades that are 100 times the global average, which means it is capable of producing 18 million pounds per year by mining only 200 to 400 tons of ore per day. Cameco has disclosed that McArthur River has a licensed capacity of 25 million pounds per year. Like many of us in the precious metal space, they have bought the dips. UROY has on their balance sheet over 1.7 million pounds of U3O8, and they'll keep buying more, taking supply off the market, and there are more groups doing the same thing. This is a bet, and a very calculated one, that we either have more uranium production or the lights go out. So what you have here is the first ever boutique funding vehicle for new mines and for buying physical supply. Think of it as a physically backed ETF with managerial expertise in the uranium industry, which will make them a far superior funding partner than a traditional bank loan or an unnecessary share dilution to raise the capital. Creating royalty streams is the most scalable business model, and it is a recession-proof model. That's really the kicker here, especially as many feel we are headed towards a recession. This is one investment play that you can make in that sector where it is recession-proof. The income essentially is fixed per contract and growing with each one while doing very little to increase overhead. The company spends $0 drilling, $0 developing, $0 mining or extracting, refining, hauling, and owns no caterpillars, no helicopters, no rigs, and no equipment, and no dirt. So that's the beauty of it. They don't have those costs to worry about. Uranium Royalty Corporation also announced its wholly owned subsidiary has entered into an agreement with Anfield Energy Incorporated to acquire a portfolio of royalties on U.S. projects comprised of a number of promising royalties, and this is yet another indication management is executing on its mission to lead the uranium royalty industry and to dominate it. H.C. Wainwright has them as a strong buy target of $5.70 or thereabouts as of the recording of this video, with the price right now much less than half of that. Rick Rule, Marin Katusa, Sprott Global, Warren Gilman, who manages money for Asian billionaires, Amir Adnani, who is the founder of the largest North American uranium-focused company, Altius Resources, world-renowned capital allocator within the resource sector, as well as a number of additional institutional funds and investors are all shareholders of Uranium Royalty Corporation. So that gives you an idea of the background of this company. I would encourage you to take a look at the stock price, follow it closely, look at the health of the company. For Uranium Royalty Corporation, I'm going to post a link in the description below to the website. I'm going to encourage you to do your own due diligence and research and understand that this is a little bit of a higher risk venture, but to do your own research before making any financial decisions there. But I thought I'd present this information to you as we talk about possibilities and ways to be able to expand and diversify within the metals space, and that's one way to do it. But nonetheless, I think in a way we should be prepared for a bull run for gold, and it is quite possible now, I think more than ever before, even if there was a pullback in gold's price, that we could see it reach $2,500 by 2025. And we'll find out soon enough. Let me know what your thoughts are on this story and on this news and about UROY. I'd like to extend a multitude of gratitude to you all for taking the time to watch and to encourage you to please rate, share, comment, and subscribe.